Thank you very much for staying on the marketplace. Welcome back. Now, let's have a rundown of some of the topical stories making headlines today. And your Mahini of the Lower Discove traditional area in the Western region, Nana Kwesi Agyeman, has criticized managers of the petroleum sector for persistently neglecting the Western region as far as benefits from the oil and gas sector, oil and gas resources are concerned. He was speaking as part of the two-day 5th National Policy Summit at Takoradi.
According to Nana Agyeman, the story would have been different if the oil had been found in the Ashanti region. He was not happy with the current situation, which he noted constitutes a total neglect of the region. He said chiefs within the region are having a tough time with their subjects who are of the view that they were not doing enough to bring more of the oil benefits to the region.
All that we are saying is that now is for all of us. Resources from any part of the country is for all of us. But people begin to become angry when basic things are being denied. Basic rights are being denied. And let me quote former President J.J. Lawrence. It's one of his quotations that he made, that out of injustice, there's the chance of revolt. You are pushing us to the wall too much. We are getting fed up. Okay. We are getting fed up, madam. Seriously. Madam, you are talking about land for your office. Thankfully, the chairman of the GSPC Foundation is the president of the Regional House of Chiefs. What is the land problem? Tell us. We'll go and find new land. To us, it should not be an issue. Immediately you mentioned it, I looked straight into the eye of the Metro Chief and said, I doubt even if that you are talking about this.
In response, Chief Finance Officer of the Ghana National Petroleum Corporation, Comfort Iniaje, called for a little more restraint to ensure that the people of the Western region derive all the benefits of the oil they find.
The oil sector is not a one-day affair. It's an international, we are playing within the international arena. And like I said, within the international, within the laws that govern our operations. So we have to have some level of patience before we can derive all the benefits that can accrue from this operation. The issue of 10% was raised from beginning. I think the government has addressed that. In terms of what we can also do with our head office, we have stated that we have, for now, rented offices which our foundation is occupying. Next year, we are going to start construction of our operational head office. And that is where all our engineers and all will be residing. So it's just an act of faith to show the people of Western region that when the president made that promise in his manifesto, in the NPP manifesto, he meant it. And when GNPC also committed that we would do it.
She also emphasized that skill training remained core on the agenda to ensure that all Ghanaians can obtain jobs and other opportunities in the industry.
Saying that once we embark on the Voltaire, we can give assurance to Ghanaians that we may not control all the forces that will impact negatively, but we stand poised to deal with them. You've come into an industry. You need skilled labor. The skilled labor, when they finish, they need jobs. Which do you do first? Do you see? So there could be opportunities to employ, and then you find that you don't have people. We have therefore invested since 2010 when we started production. In fact, for all the petroleum agreements that have been signed, we have ensured that we've provided for training allowance to be paid by the partners to GNPC to train all Ghanaians, not just GNPC staff. And number two, we ourselves too have devoted part of the funds that have been allocated to us from the PRMA, the Petroleum Revenue Management Act, to also support this training. And we've done this over the years. Of course, as you do that, you also work to improve the opportunities, as in where can they be employed. And that is a function of the activities that are going on.
The GNPC is currently exploring the Voltairean Basin for possible onshore discovery of oil and gas resources.
Now, citrus farmers at Obuasi and other communities in the Adansi area of the Ashanti region are recording huge post-harvest losses due to poor roads and lack of ready markets. Some of them are already contemplating switching to cocoa plantation. Prince Apia visited Adumanu in the Adansi North District to interact with some affected farmers and has come through with this report.
Chumesi Ankwa, also known as Nection, sells fruit juice at Tech Junction. Sometimes his business stalls due to unavailability of raw materials.
Orange comes 3 months in the year, maybe 3 times in the year. But if orange goes, we cannot get any orange again to do our own thing. So I'm appealing to government that it should provide us medicine that cannot cause harm to us, but protects the fruit for us to get some every day we want to.
This is the road to Adumanu, one of the major citrus hubs, untarred with huge gullies, very difficult to ply. 40-year-old Kofi Owusu-Setre has a 10-acre citrus farm on which he has been working for the past 6 years here in Adumanu. He spends over 20,000 Ghana cedis every year to hire labor to maintain the farm. For the past 2 years, Kofi has sold only 20 bags of oranges from this farm with the potential for 1,000 bags.
You see how our road is. I can't get market. I have orange. This farm is over 10 acres. But last year, no market. This year, too, because of our road.
Okay, so after waiting close to 2 years for the plants to bear fruits, the orange fruits, farmers here at Adumanu would have to wait and see their crops rotting on the trees because of lack of market and poor roads leading to the markets. As a result, Kofi wants to give up citrus for cocoa farming. He is convinced he can offset his production cost with guaranteed market for his produce.
Because of the challenges that we are facing here, last year I was supposed to have 1,000 bags plus, but only 25 bags that I sell it. So this year too, you see how the oranges come, but this year even I supposed to get more than last year, but nobody is coming here to buy the orange for us.
So what happened?
Yeah, because of that, I have made my mind that this season that we are going, I have to cut all the orange down so that I can plant cocoa, because I have seen that only cocoa that the government need or he cater for. So I have to go into cocoa.
Obuasi Municipal Chief Executive Elijah Adansebona speaks of a citrus processing plant under government's one district, one factory policy.
If you're on your way to Kumasi, before you get to Chichivre, there is a site there. As an assembly, we've done our best documentation done for the private individual who wants to set up this factory. It's a citrus factory. And so as we speak, we are doing 50,000 citrus seedlings, and then
until this factory is established and other measures put in place, oranges from these communities will continue to rot away with their capital. Prince Apia reporting.
Let's now do some international business news now. And the British pound sterling has slipped from earlier gains after consecutive lawmakers voted to back Prime Minister Theresa May in the vote of confidence in her leadership.
The pound slipped back from its highs of earlier on Wednesday, even though Prime Minister Theresa May won the vote of confidence in her leadership. After the results dipped to $1.26, having hit a high of almost $1.27 earlier. Of the 317 Conservative MPs, 200 backed the Prime Minister, but 117 voted against her. XTB Online Trading said the far from comprehensive victory had caused some selling on the markets. Currency traders had expected Mrs. May to win the confidence vote, and the pound traded ahead for much of Wednesday. The challenge to Mrs. May was brought by Conservative MPs who said Mrs. May's deal with the EU had watered down the Brexit that voters were promised in the 2016 referendum. Her decision to cancel Tuesday's parliamentary vote on the deal prompted them to back a no-confidence vote. Mrs. May had meetings with European leaders on Tuesday, seeking support for changes to her Brexit deal in a last-ditch bid to save it. She will discuss further changes at an EU summit on Thursday. The European Union has ruled out renegotiating the divorce agreement. Parliament is set to vote on a deal before the 21st of January.
All right, so those were some stories on the local and international front. Let's now come down home and do some macroeconomic stories now. And a marginal reduction in prices of food items and transport has resulted in a drop in the rate of inflation to 9.3% for November. This is a consistent drop from the month of September when it recorded 9.7%. Let's recap the explanation from acting government statistician Ba Wadie.
The year-on-year inflation rate for November stood at 9.3%, a marginal reduction from the rate recorded in October. There has been a reported case of a reduction in food prices over the past few weeks, a situation the Minister of Food and Agriculture attributed to several policy interventions by government. According to the Ghana Statistical Service, inflation for the food subgroup recorded a rate of 8.6%, a reduction of 0.3% points as compared to the October rate of 8.9%. Acting government statistician Ba Wadie linked the reduction to a marginal drop in transportation fares.
Food and then transport group, all these recorded dips in the inflation rates. Then for the food group, the specific subgroups that recorded declines in the inflation rate include food products not elsewhere classified. That is, these recorded inflation rates that were lower than what was recorded in October. Then we have mineral water, soft drinks, fruit juice, and vegetable juices.
Meanwhile, at the regional level, 5 regions recorded higher rates than the national average. The Upper West region recorded the highest inflation rate of 11.5%, followed by the Bonahafo and Western regions.
The Upper West, Bonahafo, Western, Ashanti, and Northern recorded inflation rates that were above the national average of 9.3%. Upper West region recorded the highest year-on-year inflation rate of 11.5%, followed by Bonahafo region 10.2%, while Upper East region recorded the lowest year-on-year inflation rate of 7.6% in the month of November 2018. The November 2018 inflation rate of 9.3% is the lowest recorded since January 2013.
Imported items was 11.1% in November 2018, same as the rate recorded in October, whilst locally produced items stood at 8.6% compared to the 8.8% recorded in October 2018.
All right, so joining me to do some more analysis on this particular trend is economist from Data Bank, Courage Martin. Now, Courage, welcome to the marketplace. Now, so what does this mean to the economy as a whole?
Well, it's good and it makes the outlook a bit better. And it's good on 2 main fronts, at least, that I can immediately say. First is the impact of a lower inflation on purchasing power. Now, you know that inflation is basically the loss in the value of the money in your pocket. So when inflation goes up, you are enduring or incurring a bigger loss to the value of that money. So a reduction in inflation means that the loss is now smaller. And that means that purchasing power is a bit more stable going forward. Okay. And what it means is that consumer confidence should go up. And if consumer confidence goes up, businesses should also start to witness an improvement in demand. And once there's an improvement in demand, we should start seeing an expansion in business operations. And that should also translate into the need to employ more hands, and unemployment will go down. But this happens over a period of time, not in the short term, as the analysis seems to suggest. But the improvement is good for purchasing power and business confidence. But there's the other side also, which is good for currency stability, because normally when you take two countries, Ghana and say the US, the country with a higher inflation rate, say Ghana, normally experiences a higher rate of currency depreciation because the inflation differentials will be too wide and there will be no much confidence in the local currency. Now, as inflation declines, that should help reduce the inflation differentials and reduce the pressure on the local currency.
Now, are we expecting this particular trend to be sustainable coming into next year?
Yes, it looks quite good for the outlook to be sustained. And why I say so, there's a number of issues. One, when you look at the impact of the tax hikes that was done in the mid-year budget, it appears it worked its way through the food inflation, not non-food inflation. And non-food inflation accounts for 56% of the weight, whereas food inflation accounts for just 44% of the weight. So it worked its way through the less weighted item or component of the inflation basket. So that has helped the inflation not to reflect, the overall inflation not to reflect the tax measures. It appears the measures are decaying. The impact of the taxes is decaying from food inflation itself. And so if we maintain a stable or a declining non-food inflation, then we should continue to see a decline. And to that effect, we think that the decline in crude oil price on the world market also bodes well for the outlook, because that means that non-food inflation can be contained going forward. However, we are still keeping our fingers crossed because PURC is in the process of reviewing, suggestions from stakeholders in the industry, and the outcome can also impact on the direction of inflation expectations.
And would this also necessarily have an impact on the cost of credits?
Yes, it should, because interest rates is a compensation for the risk in the future, which includes inflation risk. So when inflation risk declines, you expect that the risk premium that is demanded by banks and lenders should also decline. And then that should help lending rates or interest rates come down.
And lastly, what kind of signal is this sending to foreign investors or the international community?
It's a positive signal, I should think so, on the face of it, holding other factors constant, because then foreign investors, most of the concerns they have is the potential to maintain currency stability or otherwise, because it's the biggest risk to the returns they make in investing in Ghana. Now, if inflation goes down, then the good news is that it bodes well for currency stability, holding other things constant. And then that should improve their appetite for investment in our local economy.
Many thanks for your time. Courage Marty is an economist with Databank. He's been sharing his thoughts on the current situation where inflationary trend has witnessed a significant or consistent dip in recent times. Let's now do one of our other top stories today. And sources close to shareholders say ADB Bank is working to delist from the Ghana Stock Exchange. The following report has more on what has influenced this move.
Sources say the development has been influenced by the change in ownership of the bank in terms of those with majority interest in ADB. This was after the Bank of Ghana reversed majority share acquisition by Bellstar Capital and Starmount Development Corporation, EcoBank Development Corporation and SIC Financial. It then resulted in Bank of Ghana and the Ministry of Finance taking controlling interest in the bank. It is, however, unclear for now what might have influenced this move, but sources say it has to do with how the whole initial public offering was done, which led to the takeover of the bank by some private firms. Therefore, it might be right for the delisting to be done to reflect the change in ownership of the bank. It is still unclear for now whether a separate special resolution would be tabled at the upcoming general meeting next week, or it will be done after that meeting. Persons close to the proposals have also argued it could be looked at even after the AGM next week. Sources say there are plans to pay off those retail investors that bought into the bank if the plan to delist materializes. A little over 122 million ADB shares were listed on the Ghana Stock Exchange in December last year. The share price had gone up by more than 70% to hit 5 cedis 95 pesos post-listing on the Ghana Stock Exchange.
All right, so let's get some more perspectives on this move by ADB Bank and speak with Lord Mensah. Dr. Lord Mensah is a financial analyst at the University of Ghana Business School.
It gives you a signal that the new shareholders possibly might have a strong information, and therefore, in the end, the public perception on that firm is different. That is why possibly they want to coil in, they want to delist and then restructure and polish themselves before they come to public. Remember, stock exchange has to do with information. And in the end, if the information out there is not that strong for public consumption, obviously the new shareholders needs to react and then possibly find a way to polish and then come back to the exchange. We've had this happening, across exchanges. Companies, they list, and then over time, they come back and list. So I'm not surprised to see that once there's a change in ownership.
What kind of impact will this have on the stock market? Some have argued that it might not be good for stock market development.
Yeah, for stock market development, I think across Africa, we've been crying out loud, when it comes to financial development, the stock market. For now, we normally use the banking sector to gauge the financial sector development across the Africa. So it's something that will affect the market. But then we hope that it's going to be a temporary delisting and possibly coming back permanent.
All right, so we're likely to speak to our correspondent who is currently at the stock exchange to get views of the players of the market. But before then, in another development, the Ghana Stock Exchange says it is worried about the inability of the Energy Bank to raise the required funds to list on the market. Energy Commercial Bank failed to raise the minimum amount for its 340 million cedis IPO target. This has forced the bank to abandon the process of listing from the next year. Managing Director of the Stock Exchange, Kofi Yamwa, tells Joy Business this is not good for market development.
It's not good development for the market because certainly we're expecting it to be the second company on the main list in 2018. But the bottom line is that they were not able to meet the minimum subscription that they set out for. And so under the Companies Act, they have to return all those funds to applicants. We believe that if the company is desirous of doing that in the future, then following from whatever discussions that some of us read in the newspapers, they can do so in the course of the years, medium-term to long-term arrangement. We always welcome them if they do that.
Are there more companies hoping to list on this stock?
Certainly not before end year 2018, but definitely it has always been our target to bring many more companies onto the market, especially for them to raise fixed income securities and be able to do better as far as their portfolio is concerned.
Any prospects for the future?
The immediate prospects for 2019 will be for us to target the alternate market and bring many of the applications that we have received into conclusion in 2019.
All right, so unfortunately we are unable to link up with our man at the Stock Exchange. We'll bring you updates of that development in our subsequent bulletins. But for now, it's a wrap of on the marketplace. Many thanks for watching. My name is Emmanuel Abwaji. Have a good afternoon.